Good morning and welcome to this webinar with the Spain-US Chamber of Commerce. Today we are going to discuss an interesting topic, and it's employee benefits and planning strategies for business owners. But before we get deep in that topic, I would like just to remind a few things. For those of you that doesn't know the Spain-US Chamber of Commerce, we are a non-profit organization that fosters businesses between Spain and the United States, and we organize many different activities and events during the year. You can check all activities and events in our website, which is www.spainuschamber.com, and you also will be able to check what the news or the following webinars will be hosted. Regarding today's webinar, we will have a presentation, and after the presentation, we will have some time for Q&A. So for those of you that might be interested in sending some questions or have some comments regarding what is going to be presented, please, I encourage you to send those questions during the presentation or at the end. To do that, you just need to go to the control panel that is probably on the right side of your screen and find the tab that says questions. You click on that tab, write the questions and send it to us. And we will take of those questions at the end of the presentation and try to cover all the inquiries that you might have. And last but not least, I encourage you also to check our YouTube channel, since this webinar will be recorded and will be uploaded to our YouTube channel. And you can find that also on our website. You will find there not only this webinar, but all the webinars that the Spain-US Chamber has broadcasted in the past 2 years, touching many different topics of interest for the community. And without further ado, let's dive on the employee benefits and planning strategies for business owners. And today we have with us My Investment Path. My Investment Path, or Investment Management LLC, which is the legal name, it's a RIA, a registered investment advisor firm in the state of Florida, focusing on Florida investors, whether personal or corporate, and international element clients that invest in the US as professional or business owners. They help set the financial planning status quo and risk assessment to achieve their personal, family, and business goals, aligned with their investment portfolios and other wealth strategies to keep the path to success. They are a Florida RIA at your service. And to talk about this, we have today Verónica Parellada and Karma Hortalá. Verónica is an investment advisor with expertise in several fields, including investment, real estate, insurance, and portfolio management. She's a serial entrepreneur, advisor, and founder of Investment Management LLC, holds different licenses to provide a full scope of diversification strategies to better serve their clients. Originally born and raised in Barcelona, Spain, Verónica has traveled through many countries and holds an MBA and a Master of International Business at Darla Moore, specialized in finance and valuations. And we also have with us today Karma Hortalá, compliance advisor at My Investment Path. Karma is a compliance advisor and holds over 20 years of experience in the financial industry, specifically as compliance officer and advisor. Currently stands out also for her other positions at ICF, Gaesco GVC, and as a member of the Economic Commission of Football Club Barcelona, or Barça, as the fans would like to name her. She holds a Series 65 and can also take care of portfolio supervision. So thank you so much and welcome Verónica and Karma today.
Thank you, Juan Carlos, for the presentation. And yes, so as Juan Carlos was saying, he already explained who we are. I have to add on top of that, that we act in combination with American Insurance Florida Agency in order to provide all these benefits for employees and for corporations. And without further ado, this is the index of what we're going to see today. It's a very short presentation. There are many things in each slide. And yes, please feel free to add any questions that you may have during the time of the presentation, and I'll answer them at the end of the presentation. And so we're going to talk about company goals and companies that may benefit from these plans, employee benefits, regular employee benefits for those of you who are not familiarized with these benefits, or those who already have some in place but may not know about other options that there are. Also, business owners' strategies, and a little bit of how the process looks like and how long it takes and all of this. So I wanted to, you already know who we are. Juan Carlos made a great presentation of us, but I wanted Carmen to say hi because she's going to be here supporting the presentation. And she's the compliance advisor for my investment path, and I'm very happy to have her today with us. Karma?
Hi everybody. Good morning. Okay, well, I'm living right now in Barcelona, but I lived many years in Miami, where I discovered what is compliance in the US, and right here in Europe, I'm also in compliance in Europe. So it's mainly my job right now, being a compliance officer everywhere. I'm here with Veronica. I'm very happy. I'm trying to make it easy for all her clients, on what the papers and information. But of course, there's some information we need yes or yes. So, but we're here, and I'm coming probably twice a year to Miami. So everything you need, please make sure to contact me, to contact Veronica. We're here to help.
Thank you, Karma. Yeah, Karma is always in the back office of everything that we do, and she can respond today at any question regarding paperwork or that you may have about compliance or anything. So I'm gonna jump directly in the company goals that we think that are a benefit for these plans. So first of all, attracting talent to the company, it's very important. When you are recruiting, you're competing with other companies that are attracting talent to their companies, and they're offering 401ks, all this wording. And I'm assuming that not everyone knows what a 401k is. Not all the sizes of the companies are the same. And some people are new to the US, and with the help of the US Spain Chamber of Commerce, they're introducing themselves into the US. So you may know what some of the terms mean, you may not know them, but it works pretty differently from Spain, where I come from, and I opened several companies over there. So that's the reason I wanted to share with you. You may probably know most of it, but how these employee benefits can help you stand out and get that better personnel into your company and recruit better. On the other hand, you want to keep existing talent. You may have a stressed employee because he doesn't have health insurance coverage or for some other reason, and this might be in the back of their heads, and you might have the risk that this person flees and switches to another company because they may have some benefits that your company doesn't offer. It also lowers the employee's risk. How? Because when an employee has some coverage, like for retirement or for insurance, for anything that can happen to that employee is healthier also because it has a health insurance. So it's not stalling going to the doctor. It's not stalling going to the emergency room if he needs to. And if he has coverage for the family as well, he's also better at home. And at the very end, absentees employees is going to be reduced, and they're going to be better working. Also, other company goals that for business owners is improved planning and business succession and strategies. And so in this instance, excuse me, I tried to move something in my screen and it moved away. And so And planning in your business is very important as well, because you're introducing yourself in another country, and you may implement some strategies in place on the what ifs. What if something happens to me? What's going to happen to the company? What if my key employee, something happens to that key employee? Or how am I going to lock that employee in? Or how am I going to cover any risk that I may have for that employee? How I'm going to transition out? And at the very end, it's increased the company's competitiveness because all of these previous goals, right? So you're going to be better ahead to recruit, keep this talent, and have all those employees, or yourself, if you're by yourself, doing much better because all those concerns are taken away from you. So which companies can benefit from today's presentation? Actually, you don't have to be worried that, oh, I'm just by myself, I'm just a single professional, or I'm an LLC. You can also have benefits for yourself, and you can have them. Also, small companies from 1 to 10 employees can benefit from retirement plans. So you can have retirement plans as a single member LLCs. I will discuss that in another slide, but you have SEP retirement plans, you have traditional IRAs, Roth IRAs. I know I'm dropping a lot of terms right now. If you have any questions, I can also reply them at the end, but I will stop a little bit in the slide of the retirement place so I can talk a little bit of the concepts. And businesses from 10 to 100 employees, of course, above that as well. But we're looking to serve and help all these because usually I guess, because I would like to do a poll, but I don't have the powers to do the poll right now. We will send you questions afterwards. But I'm guessing that companies that are this size are still don't have everything that they need, or may benefit from having other options. And then originally, so we're looking to help with this webinar companies that have recently been established in Florida, or they come from other countries. So they need to understand a little bit, you guys need to understand a little bit the system, or you already understand it a little bit, but you want a little bit of help understanding it better. And lately we want to help those entrepreneurs to understand how to improve a little bit the succession plan they may have, or the business strategy. And we hope that this presentation is going to be helpful for this purpose. So which are the key employee benefits that are going to, that are going to benefit your company? First, as I was saying before, happy and healthy employee is going to be more productive. So the common benefits that are provided here in the US that are very different from Spain, and I don't know about any other Latin American countries, but it's group life insurance. Group life insurance is a little bit is an option that employees have if they want to cover their families of the risk of something happens to them. How are they going to support their families? Because maybe the family is depending on their income in the job. So with group life insurance, which is an option, they can either access and pay for it or not. And usually the rule of thumb would be the best would be to cover for 10 years of salary, but most companies offer minimum coverage of a year of salary. And it's pretty good because the underwriting goes through the overall employees of the company. So it's an underwriting. I don't know if you're familiarized with insurance, how it goes in here in the US, but usually when you apply for life insurance, you have to go through underwriting. And with group life insurance, you're waiving and skipping underwriting, and you can just add it on and have coverage without having a long underwriting with a medical inspection and everything. Also, group disability insurance. This is very important. In Spain, we have the Social Security, which covers for any disability that we may have, and we have very high cost of Social Security payments for the company. So when you have a short-term disability, first you have a few days of coverage with your company, and then everything else is paid by the Social Security. But here in the US, you need a group disability insurance. It's a short-term disability usually. you can have short-term disability insurance and long-term disability insurance. Usually, short-term disability insurance is going to cover for the first 3 months of that employee not being able to work for any reason. Maybe he got pneumonia and he gets in the hospital for a month. So if you don't have disability insurance, you're going to stop receiving your payments. But you still have to pay your mortgage, you still have to pay your rent. So with disability insurance, you're going to be covered for this period of time. And if you want to provide for your employees longer term, you can also have that option. And also similar to life insurance underwriting, when you offer this through the employee benefits, the underwriting is a group underwriting, so you don't have to go through medical appointments and an individual underwriting. Group health insurance. I think this is a big concern for everybody that comes out of the US and also for US citizens. Health insurance is a must because we rely that we're going to be healthy all the time, but some things happen. And when life throws you a curveball, you need to go to emergency room or whatever, you're going to have a high bill. So a group health insurance is going to help like in regular doctor appointments, so you keep your health in check. But also if you have an event, like a specific event that impacts you, and it's not going to impact that employee in such a way that needs to borrow from the company, ask for an advance of the payment, or if you're a single employee, you can also have your own health insurance in the insurance market, which is the Affordable Care Act health insurance. Sometimes also has plans for small businesses, which is something new for this 2024 year. And then other plans that are very interesting for companies, because the US offers very low Social Security retirement distribution when you are working for several years. In companies usually offer retirement plans. So retirement plans, the most common for LLCs or professionals, for instance, realtors, attorneys, that they have their PA or they have their own LLC and they're the only person working in that company, you can set up a SEP. A SEP, you can contribute a certain amount of money. It's above $60,000. This amount is changing every year. But you can have your own retirement plan, and this is totally deductible, which is a very interesting thing for these professionals, that you can have a tax deduction from the contributions to your own plan that you set up. And then you have the Simple IRA, which is much easier to set up than regular 401k. The Simple IRA, it's very convenient for 2 to 10 employees. This is very useful, and it's very easy and quick to set up. Then you also can have a benefit from retirement plan management and financial assessment to all these options that many people don't understand. What is a 401k? What is a 401k stands for the letters of a qualified plan that is a little bit more complex than the Simple IRA, and is a very common offering in the US, where the company can choose to match the contributions up to 100% if they decide so. And it's kind of free money for that employee. It's kind of an extra that they can have. So the contributions to this 401k, even to the Simple IRA, can be before taxes or after taxes. So what is before taxes look like? If you do the contributions before taxes, you're gonna have a tax deduction in your IRS declaration of your income tax. If you do the Roth or after tax contribution, you're gonna pay your taxes first, and whatever you put into the plan is gonna be tax free forever. That's the reason it's very restricted to have a Roth contributions. And you can have personal Roth plans, and you can offer also 401k traditional, which means you deduct it when you contributed, or you can have 401k Roth, and the employee can choose to pay their taxes first and then do the contribution into the Roth. And the difference when you take out from these plans is considerable. When you take the deduction of your income tax into a retirement plan, whenever you take it out, and you cannot take it out before 59 and a half years, whenever you take it out, you're going to pay income tax on the income tax you didn't pay at the previous moment, and you're going to pay capital gains on the growth of that deduction that you took at some point. And but when you do a Roth and you do a contribution, an after-tax contribution, you're going to contribute it after tax. And the beauty of this is once you take it out, it's going to be tax-free on everything you take out. So it's very interesting to pay tax now, or you even have to play a little bit on what is your tax bracket look like. If you're in a very low tax bracket now, try to do an after-tax contribution now. If you are in a very high tax bracket, do the tax deduction. And then if there's a moment or a year that you're making less, or your employees are making less, or there's an adjustment, you can have an adjustment and then change the traditional, convert it into a Roth after tax, pay taxes for that specific year. These are kind of complex strategies that are very useful for employees and for business owners to try to manage this retirement bucket for the end of, for the following coming years. And health insurance. So there are options for companies also. And these options are called health reimbursement plans. So a company can also do something different to group health insurance. Maybe your company or has only 3 persons in it, or 2 persons. So you can set up a health reimbursement plan, and this would look like every person shops in the market for their own health insurance that they're happy with, and then they purchase it. So whenever there's an event, also the health reimbursement can either pay for those premiums depending on how you set it up, or can also pay for doctor visits, emergency rooms. So the company sets up an account and a bucket where it's funding all these health reimbursement health insurance events that may happen to the employees. Okay, so business owners strategies. I'm a business owner. Most of you are business owners, I guess, today in today's presentation. And we're always busy running around trying to do like the emergencies, but you have to stop and plan ahead of time. You have to stop. You really have to. Taking your time to plan and think about, okay, you've just set up your company, or you might have been in the US or in Florida for a couple of years, 3 years, but you have to think, what's going to happen to your business? Am I covered? Are all the contingencies covered? So for instance, a business continuity strategy. So what's going to happen if I'm not able to run the business for any reason? So who's going to manage my business if I get sick? Who's going to manage my businesses if I pass? So it's not a nice topic to talk about, but we're not immortal. So we have to think about this. And there are ways that you can set up some strategies, and you can set it up in a way that the ownership doesn't go to your relatives. So the ownership goes to a business partner. For instance, I'm going to talk about contingency buy-sell agreements. So let's say your company, you have a partner in your company, or your 3 partners in the company. So contingency buy-sell agreements set up a valuation method in your company that if anything happens to any of the 3 partners, 4 partners, or whatever, the price of the company is going to be set up as X amount with this formula. Is going to take the balances, or the recurring revenue, or the client list, or the branding. So you set up like objective methods of valuation for your company, and then you set up like you are going to have the valuation method, and then the method of buying this person that is going away from the company, this person's sharing the company. What does it mean? So let's say that a company is worth $90,000, and each of the partners has a share of $30,000. I know it's not a large amount, but just to set an example. So with the contingency buy-sell agreements, what you do is you purchase life insurance on each other's share for a value, a very small value of $30,000. So what happens? Or 50,000, because if two are having to buy the share of another one, it's each of them has 15,000 on the share of the other person. So if this person passes away, you get paid by the insurance company. Those 15,000, the premium is going to be super low, and then you can buy those shares, and it doesn't go. Those shares don't go to the partner or to the children or to someone that you may have a new partner that is going to be the wife or the husband that doesn't know how to manage that company, is already overwhelmed with having a loss of a loved person. So these are and niche strategies that can be useful for business owners. Then we have key employee life insurance. This is and we also have key employee disability insurance. What if you take an employee from another country into the U.S. and your subsidiary in the U.S. depends completely on this key employee, and this key employee, something happens to this key employee, gets sick or whatever. So with the key employee with the key employee disability insurance, what you have is, if this employee gets disabled, the insurance supplies for the income that this employee would be producing to the company. So it doesn't go to the employee, it goes to the company. Then we have other wealth management strategies for the money that the company is not in use, is not using in the short term and may not need, and maybe after 1 year, that you can set up different investment strategies for those monies, or you can even set up, I'm gonna throw a very complex concept now. You can set up your own subsidiary, own insurance company to cover for contingencies. All the premiums you pay is gonna go there, and then you have a bucket of money that you need to manage. So you have other strategies that you can implement in place. And then the business owner has to think about, also, you have to think about your own personal retirement plan. So, because one of your assets in retirement is going to be your business. So how am I going to get rid of the business at the end of my career? Or how am I going to build that retirement that I was talking about before, the SEP IRA or a traditional IRA, or other methods, because you can also use life insurance. You have variable life insurance, or you have IUL. You have other options in life insurance to help you with this retirement bucket. And so how does this look like? So it's not so easy to go and so fast to go. It's not like so immediate. This takes several steps to implement. So first, and it's kind of the most tedious, I would say, part of the process, is the first one. The first one is an initial assessment, and you have to share all the details of your company, and not a lot of people is very open and happy to share all the details of their companies and their personal situation. But you need to share that, because there are compliance. I have Carmen here. There are compliance issues in whatever you're gonna set up in place. It has to be, it has to make sense on whatever you're doing, and you have to share your employee details with a company to check. So you have to fill plenty of questionnaires. You have to fill a profile. And you have to be very patient, because this initial part is going to require a lot of information that you're going to have to be open to share, because it is going to be very hard for anybody that helps you out setting these plans or these benefits for your employees, or strategies for yourself. If you don't share this information, it's very hard to continue the work. So then, after you've shared all the information that is required because of compliance and because of many other reasons, starts an investigation of alternatives among different plans. So maybe you're already in step one. So you internally have decided you're by yourself, or you have a small company, or maybe a larger company. You have already, okay, you've decided and you're already investigating. So, and you're investigating by yourself, different plans, you're getting lost. So let's go back to step one. I recommend that you guys connect with someone that have the availability to go to different plans. It is okay to investigate on your own. If you're not familiar with the US system and it's not your topic, it may be the opportunity cost of spending that time doing this, maybe a headache. But it can work out. Maybe the company you're already working with for your personal insurance can help you out, or the bank you're already working you helps you out, or even you're using ADP, which most people do, like, oh yeah, I'm just do the add-on. Okay, yes, that works. That works, and you're gonna cover initially. That's gonna help you out cover, but yet you're not fully investigating all the scope of the market, and sometimes it can be tedious and more costly than it seems. It may be convenient to add it, but it may be more costly at the end for you to do it that way. And sometimes there are better options, but it works. ADP works, and other companies also work. I'm not trying to market ADP for anything, for any reason, for good or for bad. Then after you investigated, you shared, and now you know which alternatives you have, you know your budget, you know what you feel happy with, you know what you want to offer, maybe it's not the time to do a part of the plan, maybe it's not the time to do everything, maybe it's the time to just let's go with the basic, right? Let's go with the health insurance, because I think this is the most concern when we talk to people, is the biggest concern, like, oh, health insurance. So let's go first with health insurance, and then so you start implementing this, and then there's a whole process. When you have decided a plan, there's this process is not, it's not going to be as tedious as phase one, but it's going to take a while, because there's a double check on all the information that you have shared, and there's a double check, and there's more compliance requirements, and you need to share more documents, and you need everything to be set up correctly, because you want the coverage on whatever you do, or you want the plan to be effective on whatever you choose. So that's very important. And then you need to follow up on an annual basis. Why do I say that? Because your company can change. I mean, you can change the whatever you're doing. Can change your employee's profile, your revenue. So maybe if you follow up, you have a new employee and you need to enroll that employee, or you have employees that have not enrolled. Let's go back again to group life insurance, right? There's an employee that didn't choose to get the group life, the optional group life that the company is offering, but that employee had a child or whatever, or that employee gets married. So maybe that employee then is interested in enrolling in the health plan and enrolling in the group life insurance. So you need to do reviews on what's going on, and you also need to do reviews, because if you have a retirement plan in place, maybe your personal situation has changed. Maybe if you have both options, you have the before tax and the after tax contribution, maybe for that year your salary was more, or your earnings in the company were more. Maybe for that year you prefer to do the before tax contribution, or maybe for that year you want to do another thing, or maybe that year you're feared of the markets of what's going on and you want to change the underlying investment in that plan. So you might want to switch stuff. So it's very important to do the follow-up. So a lot of people put it in autopilot and forget about it. Okay, it can work out, but it's better just to take, okay, just half an hour and do a review. Let's see if anybody's left out, remind the employees, or just do that stop that I was talking about, like stop and think, do I need this? Do I need something else? Do I need to change something? And well, my presentation is very short. You can see that I didn't have a lot of materials, and I just wanted to share with you these basic concepts, and like now it's time for Q&A. If you have anything, any doubts, anything that has been missing, or Carmen, do you want to add up anything to what I said?
Just really think. I mean, the future seems very far away and then comes very fast. So it's a very good advice to take care of what's going to happen on your future, and to know, and or at least to think on the way you want to live it.
Thank you. Thank you so much, Veronica. Thank you, Karma. So please, let's now open the Q&A part of the presentation. So those of you that would like to ask any question about all the things that Veronica shared with us, which is a lot of things I know that we need to process, but probably I'm sure that you have questions. In fact, we have a few questions. I remind you that to send those questions, you just need to click on the tab that says questions on the control panel of the system and write your question over there and send it to us. And we will take off those questions right now. So first question that we have, Veronica, it's about what you mentioned on after-tax retirement plans or contributions. So the question is, what happens when you choose an after-tax retirement plan and then you move to a different country?
Okay, that's a very good question. You're always gonna keep your plan, and it's an after tax, so it's always gonna be yours. You're always gonna keep it, and you're gonna be able to use it as it was any other investment account or regular bank account. Once you reach the age, it is yours. It's under your name, so you can do the withdrawals at that plan accordingly to regulations. You can do the withdrawals. And those withdrawals, my recommendation would be do the withdrawals in the US, and then you transfer the money to wherever country you are. But
So
it's totally tax-free. Since it's tax-free, there's no tax event.
So we don't need to fear that the country where we are living at that time would like to tax on those withdrawals that we're going to get from the US.
Okay, that's I have to say I'm not a CPA, and I cannot answer that question because we should need to have a CPA for that, and Carmen is gonna warn me if I answer to tax questions so
Yes, you
specific.
should. I'm sorry, but in US, if you're not a CPA, you cannot answer tax advice. Just a CPA can do that. I mean,
And also in each country, they have different regulations. So it's going to be difficult in any way to know how it's going to work in each country.
I can tell Spanish regulation has nothing to do with French and has nothing to do with US. I lived in both countries, and I really can say there's absolutely different.
Wonderful. Another question related to this one is, when would you advise to do a pre-tax or an after-tax retirement plan?
Okay, I would say if you have the two options in a 401k, I guess I'm assuming we're talking about the 401k, and you're in a high tax bracket. Let's say you're earning above 200,000 or above 150,000. I would definitely do the before tax. If you're earning less than 100,000, I would recommend you do the after tax. And the reason being is because of the tax brackets. So we're going to assume that in the future, your income is going to grow. So if you're having less income this year, maybe next year you're going to have a raise or inflation or whatever, you're going to be reaching, like scratching the next bracket. So my recommendation would be you have to play your numbers. If you see you're closer to the next bracket, you're going to jump from 12 to 20 or something like that, then take the deduction. And if the following year you're having less income because you're changing jobs and you were were not working for a couple of months and you have less income, then you do the after tax. Well, you're not going to have the company plan at that moment, but you can do your own plan. You can do a Roth IRA for your own. You can set up strategies. So it's on a one-to-one basis on the personal situation, but I would say the rule of thumb would be this one.
Wonderful, very useful. Thank you. Another question that we receive is, what is the process to transfer the 401k to a Roth IRA? Do I need to pay taxes in this process? In this case, I am not going to pay capital gains with the Roth IRA.
Okay.
A few questions.
I would like to know. I need to know if that 401k. So, if this person is still working for the same company. So, are we talking to change from
No,
the?
The answer is no. He just sent the reply.
So this person stopped working for a company and has a 401k, right? And wants to transfer to a personal IRA account. So you can do a rollover, and you don't have to pay taxes. So it's an option that you can pay taxes. So what you can do is you can roll over into your own IRA. You can open an IRA account and keep it as is. Just don't throw it to your own account. Just it has to go from the 401k to your new IRA. If the question is, do I want to pay taxes? So of course that is an option. You can open a Roth IRA and you can transfer the 401k that you have, the pre-tax contributions, pay your taxes at that moment, but so there's going to be a withholding of the assets that are coming from the 401k. I don't know if it's going too complex, but so let's say there's 100k and you have to pay 15% taxes. So if you do for the 401k to personal IRA, it would be 100 to 100. You're still not paying taxes. You will pay taxes when it goes away. If it goes from the 401k to the Roth IRA, then you pay for that 15%. They are going to withhold 15,000, and you're going to get 85,000 into the Roth. So what's going to happen in the Roth? No, you're never going to pay taxes again on the Roth. Okay, so this is not tax. I mean, it is how it works. So it's the Roth is going to be tax free. Of course, you have to pull it out when you reach 59 and a half. If you do it earlier, you're going to have penalizations and more things going on.
Perfect. Thank you so much. And next question. And of course, I remind everyone that you can see Veronica's contact information on your screens, but we will also share via email the presentation, the contact information, and the video recording. So you will have all the information you need to get in touch with Veronica and Karma to get deeper in any question that you might have. But having said so, another question that we have is, can you help me create a long-term tax strategy to maximize deductions and reduce my tax burden?
100%. But I need to have a private conversation with that person.
Okay, yeah, so you have the contact information there. Please send an email to Veronica, which you will see there, and you will also get an email with her contact information as well. The next question, do you have any recommendation for health insurance for companies with less than 10 full-time employees?
I would say the best place to start would be the marketplace for small business owners. And so I recommend that you go to a insurance broker so they can compare with different plans. And we can also help with that, of course, because we have the insurance company that is a broker. But you can look for a Small Business Affordable Care Act, and there are many plans offered in the marketplace. So depending on the profile of the company, you might be able to have Affordable Care Act marketplace, pretty cheap insurance, or you can do the health reimbursement plan that I discussed. So instead of having a group health coverage, you open a bank account with health reimbursement and payments for the employees, for those employees. So you have many options, and you can also have the regular group health insurance. starting at 3 employees, you can have regular group health coverage.
Perfect, thank you. More questions that we have. Let's see here. Yes. Here. If a key employee becomes unavailable due to an emergency, how can I protect my business's stability?
Okay, are we talking about a medical emergency, or what are we talking about?
Probably, it doesn't say, but it's probably medical emergency. I believe so.
Okay, if it's a medical emergency, I would say key employee disability insurance. It is the best to cover your company, because you can set up the amount that key employee means on your revenue share. So you can have coverage for that disability. So the insurance company is going to pay you substituting what that employee is producing. You can decide for how long, and that can give you enough time to look for a substitution if it's going to be a long-term issue, or but you have enough time so it doesn't impact your business. If it's a different thing, like the key employee is looking for another job or something like that, there's an option, is that you pay the bonus through a vested life insurance product. So if the key employee doesn't stay for a certain amount of years, the key employee loses the cash value of that insurance. And so instead of paying for a retirement plan, you can do another type of structure that you lock that person in, because it's not vested until doesn't. So you're covering the risk of that employee going to another company once the employee is in the US and says, "Oh, I think I can be better paid somewhere else."
Wonderful, very interesting. That's very interesting these days scenarios. Another question: are expenses related to employee benefits, such as health insurance and retirement plans, tax deductible for businesses?
Usually, yes.
Okay, perfect. The next questions. How can I ensure that my benefits plan complies with regulations such as the ACA, the Affordable Care Act, or the Obamacare?
Oh, wow. Okay, so this person has already a plan in place and has doubts that the plan. Okay, this person can contact directly the insurance carrier. So I'm assuming this person has an insurance carrier, let's say United Health, Oscar, Aetna, and Better, whatever, or Affordable. So if this person has the coverage with one of these insurance companies, this person can double check, not with the broker, but with the insurance carrier. Are we okay with what we, I mean, is everything okay in what we have? I'm not sure that we have the right plan. Can you double check? So I would say go to the insurance carrier and double check with them.
Perfect. Another question is, being a small business and not having resources to cover everything we just mentioned today, what would you recommend would be the first priority, the second priority, and then the third one to do this step by step?
Yeah, I would say start with the health, tackle the health, either personally with the health reimbursement or with a group health plan. But maybe health reimbursement is the easiest to start with, and then reimburse the premiums of the insurance coverage that every person individually has. So that would be one. And you can start with a super basic retirement plan that has a very small contribution from the business, the simple IRA. Maybe it's not going to cost more than 2,000-3,000 for the company, the contributions, if the employees do contributions themselves. And so these two. And the third one, I would say disability. Well, maybe disability would be number 2 and retirement would be 3. Yeah, I think health events are the most important. Like, and it's gonna stop your business.
And disability, short-term disability, and after that, long-term disability, or both at the same time?
Short-term is a must because it's statistically speaking is what happens the most.
Mm-hmm.
And long-term can be an option. I mean, not everybody's gonna go into it, but long-term care, it's very convenient for, it's very convenient specifically for the employee. But short-term is a must.
Perfect. Thank you so much. And related to that, another question: does the usual short-term disability insurance cover after labor?
It depends on the coverage you choose. So you can even choose. You can have riders for accidental, like accidents happening out of the office and car accidents, but labor is an option usually. So it's not considered totally a disability. So it's not. So it has to be a rider that includes labor. You have to carefully watch your coverage carefully, and if you want it added, specifically add it. Because there are, in the insurance world, you have many options and many coverages. So maybe it's going to be a little more costly, but it's going to be worth it.
Perfect. Thanks so much. Another question that we have is, does the usual insurance and retirement plans cover employees outside the US?
We only work with coverage in the US. So I'm not familiar with, we're not familiar with coverage, unless Carmen, you know more about that than I do. But we only work for coverage in the US. So I wouldn't be able to respond to that.
But do you have maybe a knowledge of some carriers or providers that could provide, because there are some companies that have people overseas, and if they would like to apply a plan for all their employees, are there options or that you might know to cover also those employees that work overseas, or that will be a different story and they would need to apply a different strategy?
For health insurance, no, because we only work with carriers in the US. So there's not going to be a doctor in the network abroad, because
Sure.
the carriers that we work with are just for US coverage. But for life insurance purposes, yes, there are carriers that offer group life coverage abroad, everywhere. So yes, there are. But for health insurance, I'm afraid that I'm not familiar enough to offer a name, because I'm looking for that, because I work with international companies. But if you find out, please share it with me. I would be very happy to have that information as well.
Mm-hmm. No, wonderful. Yes, it's nowadays it's a thing. So probably I guess that some insurance companies will try to find solutions for those clients. So let's see. We don't have any more questions. If you have any other questions, we're gonna be with you a couple of minutes. Meanwhile, I'll remind everyone that we will share Veronica's and Karma information via email. We will share the presentation, and we will share as well the video recording. And if you would like to share this with your colleagues or family, please send them to our YouTube channel, which you may be able to find it in our website, which is www.spainUSchamber.com. And you can check there all the webinars that we've been hosting for the past 2 years, touching and talking about many different topics that might be of your interest. So I think that would be all for today. Thank you so much, Veronica. Thank you so much, Karma. It's been a pleasure having you here. These things are always difficult but necessary, and small businesses are more vulnerable than large corporations. So I understand that it's a small burden, but it pays off. If things happen, it's good to be backed up and to have that safety net that you can provide with such different and various services that you can provide in products. So thank you so much.
Thank you, Juan Carlos, for having us. Thank you, Karma.
Thank you. And
Karma, we don't hear you.
Yes, I think you were maybe muted, Karma. No.
Thank you so much. Yes, I was muted. Sorry for that. Thank you so much, Veronica. Thank you so much, Juan Carlos.
Oh,
I hope to see you soon. To Miami and see you.
We hope to see you soon as well. And thank everyone for connecting today. We'll see you in our next webinar here at the Spain US Chamber of Commerce. Have a wonderful day. Goodbye.
Bye-bye.
Thank you. Bye.